An expert speak on financial wisdom as we age. Most specifically, the experts will be talking about the role of insurance as we inch towards retirement and old age. And since we are already 10 minutes behind schedule, it is my privilege as the moderator. My name is Ransford Bequin of the Association of African Universities. I have and hold the singular honor to introduce our speaker for today, who is the Executive Director of Assured Advisors, who are our insurance brokers. And she is in the name of Mami Ifua Wahima Owusu. So Mami, if you're on the call, please, this is a combination of Akraka. Bleeobi 87, some other listen to you. Hello, Mami, if you can hear me.
Mr. Baku, I lost you for a moment, but I can hear you now.
Right. So I just informed our August house here that you are going to give us a talk on financial wisdom as we age, and we'll be narrowing down on the role of insurance. So over to you now, Mami.
Okay, thank you very much, Mr. Baku. I'll do a quick, I'll put myself on video so that members can see my face quickly.
Okay, please.
Then I would ask my colleague Theo to kindly share the slides. Please, can you see my face?
Yes, I can see your face.
Yes, we
Okay.
can.
Okay, so good evening, everyone. I'm very happy today to be joining you to have this. And we are very grateful as Assured Advisors to also have you on our policies, the alumni policy. We are very, very grateful. Theo, can you kindly share the slide for us? Hello, Theo. Okay. Okay, thank you very much. Today I'll try and make it really simple. I'm aiming for 1 hour. Within 1 hour, I should be able to finish with the presentation and then the questions, and we'll be done. It's a Sunday evening, and I know a lot of us have to prepare for work tomorrow. As Mr. Beko said, my name is Ifua Wahima Owusu. I am the Executive Director of Assured Advisors Insurance Brokers. Assured Advisors Insurance Brokers are brokers, and we have 4 lines that we operate on. We do the general insurance businesses. We do the life, which Akraka 87 is part of. We also have the health insurance unit. And then we have my favorite unit, which is the claims unit. What do brokers do? We ensure that our clients get the best rates. We ensure that your claims are paid within 30 working days. We ensure that your policies are properly done so that they meet all the requirements. Your terms and conditions meet the risk that you want, so that in case of anything, in case of claims, you do not have any issues. And one thing that we also do in Assured Advisors is we do what we call the insurance audit. I always tell my clients that even if you have an individual policy, it is so important that you do insurance audit at least once a year to make sure that your beneficiaries are correctly placed on your policy. You have your trust, your trustee, your sum assured are properly done. So we do this across board for individuals, for families and also for corporate organizations. Our services are free of charge. I know when we say free of charge, a lot of people wonder what we mean, but all the premiums you see have an embedded marketing part in it, and that is what the insurance companies use to pay us. So we are paid by commission, and our services are totally free of charge. So if you see with your alumni policy, you are still paying for 80. It hasn't changed whether it is with going straight to enterprise or going through us. It's still for 80. The benefit you have is that we make sure that all your claims are paid and paid promptly when they occur. So that is Assure Advisors. Today, my role here is going to be quite simple. We are going to talk about our need, our financial need in terms of insurance as we age. I'm going to touch about on the introduction, then I'll do the understanding financial wisdom, then we'll move to life stages and financial planning, then the role of insurance across life stages. Then we'll do the types of insurances and their significance, the factors that we should consider when we are choosing insurance, then the financial wisdom and risk mitigation. And then we end with the strategies for smart insurance decisions. I would like to finish the presentation, and then when we are done, I'll open up for questions, if that is okay with everybody. Okay. Please, can you hear me?
Yes.
If you
Yes, we can. Yeah.
Thank you very much. Okay. So financial wisdom as we age. The only financial security. Just 1 minute, please. Okay. The only way to be truly financially secure is to have multiple streams of income. I think we all agree with that. And the definition of financial wisdom is making prudent decisions that secure one's financial future. And then the factors influencing financial wisdom can be age, life stage, risk tolerance, and financial goals. Okay. Theo, the next slide, please. Okay, so now let's start. Financial planning life stages. I'll start from when we were little. When we were little, I remember some time ago, my mom told me something. She said, when God gives you a child, it is your responsibility to look after that child. The child gets to a certain age, the child moves from the house. Then the child is blessed with a family. Then that child has that responsibility to look after that family. Then that family of that child also moves out, and the cycle goes over and over and over again. So basically, she was trying to tell us as a family is that you should try to take care of yourself. We shouldn't forget that it will get to a point in life where the children are no more with us. And what happens to us? When we are little, it's our parents who take care of us. What do they do? They need to make sure that we go to school. They need to make sure that we have clothes to wear. They need to make sure that we have food to eat. How do they do that? They work and make sure that is done. So what do you do for your children? Some of us have education policy for our children. Some of us do not. Some of us have treasury bills. Some of us just leave it to chance. But the child is depending on us. So when we are little, we depend on our parents. When something happens to our parents, what happens? And we've had, those of us who sold insurance for a long time have come to various situations where a child loses their father. Normally the men, they lose their parents and their whole life changes aside for them. They were once in very good schools. Now they have to drop out of those schools and then attend other schools. I have a friend who told me that a friend of his said something happened to his father. His whole life just changed overnight. He was living in Accra. He had to just one night leave Accra and go to some village because the father was no more. So what kind of things do we expect? We expect to protect our children when they are teenagers because that's what they are expecting. Then they go and they get into the teenage, and now the responsibility starts changing. Their education becomes more expensive. Are we ready for that? Their well-being, their health. Do we have any plan for their health? Because they go to the hospital, they become more expensive. Their shoes, their clothes. Then they get into the teens. We get into our teens, and then we enter into the university, and our whole idea of world starts forming and becoming something else. We are expecting to graduate for school, have a house, have a car, get married, have children. Are we prepared for that? Do we even have the financial backing for that? Are our parents ready for that? Have they prepared us for that? Do we have a college fund? Do we have a life fund for that? Then we move into the 30s and we get married. We get married and we start having children. Then we start looking out for things. We start working to build our houses, to get our cars. And then financial planning becomes even more of a concern. All those houses that we built, have we insured them? Have we taken a funeral policy for our family just in case we are no more around? Is our wife capable, or is our husband capable of looking after the family the same way the two of us were when we are not around? Our cars that we use our money to buy, have we secured it? The treasury bill in our accounts, are we constantly saving money towards that? Then we move into the 40s. At the 40s, our children are now much more matured. They are still going to school. You see, so the cycle is going round and round. Are we ready for them? The house that we are living in, the contents that we are building, the other house that we bought, um, are we taking care of it? Are we putting things in place so that if something happens, we know that we can take care of the things just as we were taking care of? Do we have disability policy at stake? Redundancy, do we have any redundancy policy just in case we drop out of work, they make us redundant? Are we covered in any way towards that? Are we building our health, our wealth in any way? And then we get into the 50s and we know that we are getting closer to retirement. Do we have a retirement plan? Do we have a pension fund? The children are leaving. Nowadays, too, the children leave quite early and they even forget that they have parents. So the children are no more with us. They're in the universities. And probably some of them are working, trying to build their own lives. Are we going to go back to them or always worry them for money? Do we have a solid pension plan? If something happens to us today, do we have something that will take care of us? And then we get to the 60s. At the 60s, most of us have gone on retirement. And most of us are dreaming to have good vacations around the world, have a very comfortable lifestyle, be able to have dinners and lunches with our friends. Are we ready for that? Have we saved enough for that? Is our pension going to be able to take care of us? If we are disabled, do we have a disability fund that is taking care of us? Do we have something that will pay us comfortably every month till we die? Do we? Well, that is what we have to face, and that is what the decision is. And along these stages, we need to plan our life and plan it properly. How do we do this? So can you go to the next slide? Okay. Now, as a young adult entering workforce, there's so many things we can do in insurance. We can take what we call a pension fund. Nowadays, there's a lot of these pension funds around that allow us to contribute monthly. So as a parent, you can even contribute 200 Ghana cedis towards your child's pension fund. And you can have an agreement with them and say that when your child is 25 years old, they can offload the pension and give your child that fund. That fund can be used by your child as a guarantee for a deposit for a house, a deposit for a car. At least it places the child in a better position than someone who never had this. And we can also do the education fund. The education fund also helps when the child is not when you are no more around, or even when you're around. I've had cases when people have called me and said, if can you help us dissolve our education fund because I have to pay for an examination fee and I do not have money. And it becomes very handy at that point. So as they become young adults, it becomes handy for them to have such funds, even when they get married. I mean, when you are married and you have your children, what do you need to cater for your child? You need the funeral policy, because in the insurance, what it basically says is that when you are no more available, your family can continuously live the same kind of lifestyle that you gave them when you were alive, or even when you are disabled, or when you are critically ill. Stroke, you get kidney problems, you get liver problem, you get cancer. I mean, these policies are always there to help you cater for your family. You've built this nice house, and you know you've spent all your savings building this nice house, and you've done nothing about it. The house is just there, not protected. I have a client who one day was sitting in his office and he said he got a call, and the call was that his house was burning down. So he called me. He said, if my house is burning, I said, don't worry, you have insurance. He got there, the fire service people came, got everything done. But the best thing of it was that he had insurance. And so insurance took care of the house. Within 6 months, he had rebuilt his house, and this time even built it better than it was before. Because when he was staying in his house, he had one or two changes he wanted to do, but he didn't have money. But at least because of this, he was able to build a new house. He didn't lose money, and his family was well taken care of. The policy he had an extension of rent. So within the 6 months, they didn't have anywhere to live. The insurance policy took care of the rent. And so they had somewhere to stay for 6 months. Okay. You have, when you're married, also, you can put in redundancy packages so that if anything happens to you at work, it is taken care of. You can have a health insurance policy for your family, and that takes good care of your family. I've been on a health insurance policy for almost 19 years, and I've had one for my mom. And I always say what is good about it is I do not have to worry about having money on me when I go to the hospital, or I do not have to worry about my aged mother going to the hospital. Actually, nowadays she goes without even telling me. All I hear, I get is a text message on my phone that says your mother has visited the hospital, and I know she's gone. Okay, so that is something the family can have. That also helps you protect you financially against all these unexpected issues that should happen. Okay. What happens if it's a single income? What happens if a partner dies? You have none of these things. Have you ever thought about it? If you should wake up one day and your partner is no more there, you have a two income flowing to the house, and one part of the income is gone. What happens? Or you are the only one who is bringing money into the family, and one day you can no more perform the same job. You maybe you're not dead, but you are disabled. What happens then? Is your family taken care of? Are they okay? Is everything going to go the same way as it was before? Then working individuals supporting your aged parents. I mean, our part of the world, it's a crime not to look after your parents. So we always need to support them. And what kind of plans do they have, and what kind of plans do we have for them? Nowadays, we have a lot of policies around. We have even the transition policies that is not cash-based, but a service-based. So if anything happens, instead of going around looking for a mortuary to when keep your parents, you have transition that will take care of that. And it gives you peace of mind, because we know that when our parents are no more, the 1 week going round and soliciting for things can be very tedious. That can take care of that. Okay. Then when we go on retirement, are we in a position to continue living the same lifestyle that we are used to? Do we have a pension plan? or we are still just depending on SNET? Have we taken any type of a tier 3 pension scheme, a voluntary one, where you can contribute a small amount of money towards your pension? Have we done that? Or we are just waiting for SNET to just give us that money? Okay. So, Theo, can I still be on the other slide, please? Okay. These are things that the different things we need in the different stages. I've spoken about education policy. I've spoken about health insurance policy. I've spoken about home insurance, content insurance, something that you need to protect your house. I've talking about the pension policies that help you towards retirement. Not the tier 1 and the tier 2, but the tier 3 that can help you when you are at that age. You can save towards having a very beautiful pension where you can travel around the world with your husband or your wife, and you can enjoy the time till the Lord calls you home. Okay, so to the next one. Okay, so I think I've spoken about a lot of insurance types of insurance policies, but I'll just go through them again. And we have so many insurance policies. I always say insurance is so dynamic. I mean, you can always develop and design a policy to suit the need. I'll take the alumni policy that you are on. It's a very unique policy, very tangible. It's tangible because you can feel it happening. When something happens, you don't need to send a cap around us again, but you just call in and the insurance company pays your sum assured and you give it to your member, who I'm sure is very happy. A lot of year groups have really benefited from this alumni thing. So that's one type of insurance that helps us. Then we have the life insurance. We have the individual life insurance policies. So I've spoken about the funeral policies. I've spoken about the education policy. You have the transition policy, which is a service policy this time, not a cash policy. So you have some of the policies that give out cash, and you have some of the policies that give out service. The service is you walk into transition, you get a coffee, you get a hairs, you get flowers, you can use their church. So this time they are not giving you cash, but they're giving you a service. If you lose someone, you call them, they pick the body up, and then they send the body to mortuary. So this time is a service, not cash. With life insurance policies, you can take as many as you want. The clause here is you should be able to pay for all of them. So we say that you can pick as many insurance policies as you want, so far as you are able to pay the premiums. If I tell you how many policies I have, I'm sure everybody will be like, wow. But I think because of where I sit, I get a lot of offers and I can never say no. So I have so many insurance policies from so many insurance companies. But I also understand that this comes in handy when something happens. So it's very important. Nowadays, we have the income protection policies that help you in time of when you're no more working, been made in redundant. These policies also come to help. Then we have the health insurance policies. We can have health insurance for the family. You can attend 600 or over. Some of the insurance companies give 700 hospitals across the country. You can visit pharmacies across the countries. It covers antenatal, it covers spectacles, it covers dental, it covers scans. I mean, health insurance policies have become a thing. Now they are becoming such a big deal. People are taking a lot of health insurance policy. We've seen an increment in it because medical services have become very expensive. And so it's becoming a way of people to secure their finances. So health insurance. Then we have the disability insurance policies, which tend to be not too expensive. I always say that the most expensive insurance you can get is motor insurance because the motor is always on the road. And so rating motor insurance is pretty more expensive than any other thing. Disability insurance is, you can have the personal insurance policies that cover you on accidents. And we've had cases when people have been behind Okada, they've fallen off, the policy has paid. They were in the kitchen cooking, they cut their fingers, the insurance policy has paid. They were traveling, they had an accident, personal accident policy covers. Then we have the famous auto insurance policy, which is motor, which is compulsory by law, and it states that at least every car plying the streets of Ghana should have the least is the third party insurance. I know though, I hope there'll be a lot of questions on motor because I know and we always get to that. And when we get that, would answer all that. Then we have the home insurance. It's a very cheap insurance policy. You use it to protect your home against fire and all its other perils, wind, storm, lightning, shifting of the ground, collapse. Then you have the content insurance. Then you have travel insurance. For those who travel a lot out of the country, especially to the Schengen states, they know about travel insurance. I've had cases where people have traveled to UK and have an emergency medical care, and travel insurance has come really handy. These are a few of the many insurance policies we have out there that all go towards making sure that we are very well secured. Okay. So the next one, please. Okay. Factors to consider when you are choosing an insurance policy. You need, first of most, to assess your specific needs. It's very important. I mean, you just don't walk into an insurance company and just buy a policy because you've heard about it. You need to be sure and be certain that it really meets your need. And do you understand the coverage options? Is this something that you need or you're just buying because someone else has bought it? And what does it cover? Now, some of the policies will tell you that we will only cover death. And some will say it's only accident, like the personal accident cover. It covers only accidents, and even covers accidental death. It doesn't cover illness. So if you have a personal accident cover and you get ill, you get sick and you die, it will not cover. You also need to evaluate the reputation and the stability of the insurance provider that you are dealing with. Will they be able to pay your claims on time? Do they have that financial strength? It's not only in Ghana, everywhere. It's important to do that. I always say that you're not buying the insurance policy because you want to give an insurance company money. You're buying it because when there is a claim, you expect them to be able to pay and meet that promise they gave you, the promise to pay your claim when it happens. Then you have to constantly review your terms and conditions. It's important. Insurance is a legal binding document, and it is like SNET. What you put on the policy is what we will go by. So, for example, you have a huge insurance policy. Let me say you have 1 million insurance policy. We can give you 1 million insurance policy, and you have put on it because you weren't married, you placed maybe your parents, and then you die. But when you were dying, you had children, you had a wife. Unfortunately, we do not care whether you put in your will that everything should go to your wife and your children. What we'll look at is your policy document, what you've stated on it, and that's what we'll do. So if it's on it that we should give it to your mother, your father, your brother, your uncle, we are going to give it to them. So it is important that every time when your situation change, you go and look at your policy terms and conditions, you look at your beneficiaries, you look at everything on it, and you change it so that it meets your need. It meets what you expect to happen when you are not around. And then, of course, if you do not understand any terms and conditions, we always say it's always advisable to always get an expert to do that. In our industry, you can get someone who is an insurance person, you can get an agent, you can get a broker, but it's important that you seek an expert advice so that the right thing is always done. Okay. Okay. The next one's here. Okay. Financial wisdom. Insurance as a risk mitigation tool, mitigating financial risk associated with health, property, and longevity. Okay. Insurance is not just, I know a lot of people say, I don't trust insurance, and they don't pay insurance, they don't pay claims. I don't want insurance. I'll take care of myself. God is my savior. God will help me. Yes. But when you take the story in the Bible about the talents, you see that God says he would bless those who take good care of themselves. We need to use insurance as a risk mitigation tool to help us save. From the beginning of my slide, I said financial security, you should have different income levels. You are doing treasury bills here. You have an insurance policy to take care of your house. Let me give a scenario. So you used all your money to build this beautiful house with its contents, okay? Nice screen TV with your Boss radios and everything. And then you travel, and one day you come and thieves have entered your house, and your 80-inch TV is gone, your Boss radio is gone, your chairs are all loaded off. And this has happened before. Everything is gone. Your house has actually been cleared. Actually, one of the stories I heard, the neighbors saw a truck pack cars, things out of the house, and actually assumed the person was moving out of the house. So didn't do anything. Apparently, they were stealing the person. Everything is gone. Are you going to go into that account of yours that you have saved for your child's education abroad, and you're going to take that thing to refurbish your house again? Or you have an insurance policy that you can call on and quickly get the money to take care of your house? That's things you should think about. I have a mate in America who says she never loses a chance of taking an insurance policy, because the first time she moved into America, she took a content insurance. And she said that was a very difficult decision to take because she didn't have that money. She had just moved into America and stuff. Then one day she comes home and the whole house is flooded. She said if it wasn't the insurance policy, she doesn't know how she would have bought her things back and placed them back into the house. Since then, she's made it an intentional thing to always make sure that she has adequate insurance cover. Okay. It's the same with health. You go into the hospital, you don't have money. They are asking you for scans. They are asking you to go and do a lot of medical tests. And this is you here calling this person, calling that person, because you don't have money. But with an insurance, health insurance cover, there you go. You get everything done. It gives you peace of mind. It reduces the stress. I have a client who said he had his shop was burning in Accra, in Makola. And they called me and they said, "Oh, your shop is burning? It's part of the thing." He said, "Oh, yes, I know it's burning, but I know that I have insurance cover." So as he was going back to Makola, in his head, he was saying to himself, at least I have an insurance cover. And so it gave him a peace of mind when he was going on. It reduces the stress and uncertainty by having a safety net in place. Okay. You are never scared because you know there is something you can count on. Then it gives you the long-term financial planning, supporting overall financial stability and wealth preservation. So you don't have to say to yourself that I need to always save money. I mean, my money in my account, am I going to use it for this? Am I going to, you know exactly what your monies are going for. So you know that when you have a funeral, you have a funeral cover. You know that when it's pension, you have a pension cover. You know when there's health, you have health. And you also know that money you are saving in your account, you are saving it so that when you go on pension, you can use it to do your trip around the world. Okay. So that is what financial wisdom is about, and risk mitigation. We have to make sure that at all times we are properly and adequately covered. Okay. So, strategy for smart insurance decisions. You have to do regular reviews of your policy terms and conditions. Even with your car insurance, you need to do regular reviews. Your car that you had, is it the same cost if you should sell it today? The dollar is always changing. So if you should have an accident today, that policy you have, will it be able to buy you the same kind of car you are driving today? You need to look at it. Okay, so reevaluating insurance needs as life circumstances change. You need to constantly do that. You weren't married when you took that funeral policy. Now you are married. Is your wife on your policy? Is your child on the policy? Have you made them the next of kin, or you are just leaving that to chance? It's like a will. You have to constantly go back to do a regular review of it. Then bundling policies. There are some policies that you can bundle that becomes cheaper. When we say bundle, put them together instead of taking them one, you just put everything together. There are lots of people who have maybe, for example, 6 cars, and the 6 cars are scattered all over. There's one in Star, there's one in Prime, there's one in Enterprise, there's one in Glyco. When I see these cases, I always ask them, do you know that you are losing what we call the fleet discount? Because a fleet discount can give you 10% discount, can give you 15%, and sometimes even 20%, depending on the number of cars. But you have this spread all across all these insurance companies, and they don't see it as a fleet, because if Glyco has 1 car and Star has 1 car, how can that be a fleet to them? So that's something you should also look at. And then I can't stop by always saying you need to always seek advice if you need it. Okay. So, okay. So thank you. I promise to be within the 1 hour. I think we can open up for discussion. So thank you very much.
Thank you very, very much, Mami, for I think you've touched on virtually everything from cradle to the grave. And colleagues, she's here with us. Ask your questions and let her answer them for us. Thank you.
Hello.
Hello, sir.
Hi, my name is David Squire. Sorry, I joined slightly. I think I heard almost everything that you touched on, and thank you. Currently, I'm one of the admins for the Platinum platform with together with Ransford. Thank you so much for such a very clear and frank delivery. What I want to the thing on my mind, encouraging our mates to join in, is some of them just think that what we've done is only about funerals, but then I know the Platinum is not just about funerals. So I have 2 questions. I want you to, if you are very conversant with, I don't know if you are, because I know we're dealing with Karen, very conversant with the Platinum policy, to elaborate on the benefits aligned with the Platinum policy that we hold currently. And then number 2, I hope you're jotting it down. Number 2, some of us on the policy reside outside Ghana. And from the delivery or the presentation that you've done this evening, there are a lot of policies that, particularly myself, who doesn't live in Ghana, is interested in. For example, income protection, buildings insurance, content insurance, funeral insurance, health insurance. Are we also entitled to insure on those if we live outside Ghana with your company? So these are my 2 questions for now.
Okay. So I will take the last one, and then I will take my time and take the other one, the alumni one, the Platinum one, and explain it in detail. whilst my colleague prepares to show the slide on the alumni one on the screen for us to all
Okay.
see. Okay. I have a very good friend online, Tony. Hello, Tony.
Hi, Efo, how are you doing?
Fine, thank you, Tony. So, okay, so for the policies I spoke about, yes, if you have your house in Ghana, we could always give you a house insurance policy. It's not a problem at all. We have some of the policies that you can take here in Ghana. What I'm going to do is, my colleague Theo, if he doesn't mind, should kindly, Theo, okay, sir, can you kindly give me your telephone number? And then I will get Karen. Karen is very capable of making sure that you are very happy with all your policies. And or Theo would get in touch with you on Monday and then help you with all the policies that you're interested in. You could actually
Okay.
take.
Okay, Karen knows me very well. We kind of deliberate a lot because I do the payments for our renewals and everything. So
Okay,
if you just tell her David Squire, she will
David
be
Square.
able
Okay.
to.
Yes,
Yeah,
Karen
David
is my
Squire.
colleague and she's very capable of
Yeah.
making sure that you're happy to
Okay.
have all the policies that you want. So I would
Oh no,
ensure.
I asked for you to elaborate. So for the sake of all our colleagues who also live outside, because on a platinum we have a lot of colleagues from
Oh, so I
outside and
will
colleagues.
come there.
Yeah, so I just want them to also know what other policies that we can, because for example, we have just done a YIBIMA, a group contribution to support a colleague in hospital. Now that I'm hearing about health insurance and stuff,
Yeah.
there are a lot of, if we can get our colleagues to kind of acquire those policies, that would maybe take away the pressure from this group that we have. Are you getting where I'm coming from?
Yes,
Like, so for
I do.
example, a colleague
So
is in hospital. If they have an insurance, we don't need to support, but if they don't have it, so I want you to elaborate on the health insurance, especially number one, and what is involved in that, especially taking into account our age. We are around averagely 55 years of age, or 54, getting to 55, 56. So 4 years away for retirement. And all these retirement plans, how do they apply to us specifically, our year group, our age, and etc.
okay, sir. So I'll start with the health insurance policy. We can actually
Thank you.
have a health insurance policy for the group, just as we have the funeral for the group. So the group can come together and take a health insurance policy. The health insurance policy covers, depending on the insurance company we choose, can give you access to over 700 hospitals across Ghana. They can also give you access to a number of pharmacies around Ghana. It has an inpatient cover, depending on the package, just as the alumni was, depending on the package you choose, it will determine which hospitals you can go to. But for sure, the lowest package can even still take you to the government hospitals. When I say government hospitals, we talk about Kolebu 37, yes. But for UGMC, the package is quite different. You have to go a bit up. The inpatient covers the hospital bed. It can cover all the medical that will go there, the scans, the tests, and everything. So far as you are in the hospital, it has a cover limit. Some of them can give you as much as 30,000. Some of them can cover you as much as 40,000, 50,000. It all depends on what you want. And of course, it comes with its own individual premium payment, and it's also for a year. Then it has an outpatient cover, and it means that you don't sleep in the hospital, but you go for consultation. So you go, whatever the doctor sees you, the hospital card pays for it, and then that is it. So yes, we can always do a group health insurance cover for your year group if they want it. That is very easy to do, just as we did for the funeral.
Thank
Okay, is that
you.
okay? Yes, please, sir. So we are very open to that. And Karen, I would ask Karen to talk to you about and give you sample scenarios so that if you are interested, yes. In the health
Okay.
insurance too, you can do it for families. So those who are here Maybe if the group doesn't want to take it, you can do it for the family. So you can have a family of 2, a family of 4, a family of 6, and it goes the same way. We can do it for the family. And then we can do it for corporate organizations too, where the company can take it for their staff. I see health insurance as a very important policy. For example, I took one for my mom. My mom has been on it for close to maybe 15 years. And why did we take it for my mom as siblings? We realized that as she was growing, it was becoming quite difficult for her to always call us and access for money to take her to the hospital. So we decided to put her on the health insurance cover. Now she has a card. She's used it for so many years. When she's ill, she doesn't have to call anybody. She just goes to the hospital. She takes care of herself, and everybody is happy. There are no issues. And I mean, what we pay a year for what she gets, it's good enough because it covers her eyes, it covers her dental care, it covers her scans, it covers so many things. So that is health. Okay. Then we have the house policy that, yes, if you have a house in Ghana, we can take a house insurance cover for you here in Ghana. Okay. So, Mr. Squire, is that okay?
Yeah, that's okay.
Then I go to
What about the
the other
pension
one,
one?
yes. The what?
The pension one that you talked about.
Okay.
Yeah.
Okay, so with the pensions, the regulation says there are 3 tiers. We have the first and the second tier, which is compulsory by law. And then we have the third tier, which is optional. A voluntary, meaning that you can take it for yourself as an individual. For that, you can decide how much you want to contribute. So you get an insurance a pension company, and then you can decide to contribute 200, 300, 400 a month. And then they build that money towards your pension for you. At the
Okay.
point of pension, you can go for the money. You can actually do that for your children too. If they are
All
young,
right.
you can actually do an individual pension for your children. I encourage people to do that. For my office people, I've encouraged all of them to do it. Think about it. We can use 200 to go and sit somewhere and have a nice beer with our friends and keep up. Why can't we use
Yeah.
that in a month to save towards our child? By the time the child is 25, the child has some money there to go and pick and start life. Most of us started life and we didn't have anything and we're all over the place. But you can imagine if your mom has saved 200,000 and gives it to you as your start life package. It takes you somewhere. You are far ahead of your colleagues because you can use that to do something. Okay, so that is for pension. Then
Yeah,
let me
sorry I asked someone I think about a year ago with this pension thing, and
yes, please.
apparently there has to be you have to have some sort of like I think the minimum age. Because when I told the person my age, he said I'm not qualified, which I don't know. I don't understand if
So
there's a reason.
yes, okay. So some time ago, the pension was like that.
Mm,
Now we have a lot of private pension companies around
right.
that are doing it for the informal sector. We have
Okay.
People's Pension Trust, we have Access, we have Petra, we have so many of them who have
Mm.
started venturing into the informal space. And you know how the informal sector works. The informal does not work like the formal. With the formal, we say at age 60, you are done. You
Mm.
are done. Your pension is over. But now we have these companies that can go beyond the 60 years.
So you don't have a minimum age of paying into the pot.
No, no.
Okay. All right.
Most of the companies are trying to, because of the informal, trying to open up, so far as you can contribute, they are opening up. But if you are doing
Okay.
it for your child, it's not 60 years, so
Yeah.
you can contribute for 20 years for your child, 10 years for your child, 15 years for your child. And that's good. Okay.
Okay.
So let me talk a bit about your alumni. I think that was the next question Mr. Squire asked. Okay.
Yeah.
So
I think I just before you do that, I just want to thank you for the clarity, and I hope that colleagues have benefited from how you've explained it, and then they could go back and then look at their own individual situations and then decide. And they would also talk about it as a group and get back to you again. Thank you so much for the
Yes.
first part. So then we'll listen to the platinum one too. Thank you so much, Ifua.
Okay, thank you. Okay, I'll let you put our telephone there. And then if you want us to contact you, you can kindly put your telephone in the chat box. My colleagues, I can see 2 or 3 of my colleagues on the Zoom. They'll pick up your call, and I promise that tomorrow I'll personally call you, and then we can have a conversation. So I'll do the alumni. Okay, so the alumni is a beautiful policy. I love alumni because my year group has been on it for close to 7 years, if I must say. It gives you peace of mind. You don't have to now beg people to contribute when something happens to a member. There's no discrimination. I mean, you will not say that. For me, I went to a big girl, so let me use the females. You know, we females, we can be very petty. So it won't be like, oh, as for Akosia, when she was in school, she wasn't my friend. So me, I'm not going to contribute for her. And as for Amma, she was my best friend. So let me contribute. It cuts off all this discrimination. And then it brings financial security. It takes off the burden. And there is financial security for the group. So alumni, we've had over 300-year groups joining alumni because we have all benefited from it. It brings some sanity onto the platform. Now, what does it cover? So can I see the benefit cover? It just doesn't cover death. Okay. Theo, please, can you go to the benefit cover, please? I think you had it on and you took it off. Where the sum assured are. Not this, the sum assured. Theo.
Hello.
Hello, sir. Now, Theo, this one.
Hello. Can you hear me?
Yes, sir.
Yeah, it's Amma here speaking from Mr. Square. We are all based abroad, anyway, specifically London, right? So let's say I take a policy, okay, and I happen to pass away in London. What happens to the payment?
Okay, say, I would answer that question with the question I'm answering, if that's fine with you. So if
Yeah.
I finish, I'll just add it to it. Okay. So the benefits covers death of your member. It covers some death of the spouse. It covers 2 adult dependents. It covers critical illness of the member, and it covers total permanent disability. I think I spoke about disability policy here. So it just doesn't cover death of a member and the spouse. It covers death of your 2 adult dependents. Now, what do we say about critical illness of a member? When a member should suffer stroke, it covers. If it should have some forms of critical illness, it covers. If it should have kidney, it covers. So you realize that the policy is not just always talking about death, but it's talking about even you when you are alive, but in a critical situation. Then it covers permanent disability. You were on your way to work, you had an accident, you cannot perform the job you are trained to perform again. That is the end. It covers it. Okay. There are a lot of people who benefit. Their mother died, their father, they get a benefit for their mother, their father, and they think it's okay. We are not going to contribute again. For me personally, it's been a bit of a struggle to me when I hear people do that, because I always say, assume you didn't have an insurance policy. Are you trying to tell me that you will not contribute towards your friends' parents dying because you have gotten your contribution? It doesn't work like that. Also, what happens to you when you die? Are you trying to say that your year group shouldn't contribute any money and give to your family when you are dead? So you should realize that the policy goes beyond the death. It covers so many other things. And right now, I've spoken about 3 things that it covers for the member: critical illness, permanent disability, and the death itself. For the older year groups, I mean, those in the 70s, those who finished school in the 70s, we've realized that they've appreciated the policy much more because of the critical illness part of the policy. You get a lot of critical illness claims coming from those groups, because as we grow, we, the human beings, become weak and we start experiencing other things. We start encountering other illnesses that we need support, financial support. So this comes in to help us. So for Mr. Square,
Yeah.
please, I hope I've been able to help you address this with your members for them to know that it's not just death of their parents, but also it is important to consider themselves when there's critical illness and when there is total permanent disability.
Thank you very much. Can you explain the sum assured part for each?
Okay.
So
you are on the platinum. So the platinum, for death of a member, you get 20,000. For death of a spouse, you get 20,000. For a death of an outdoor dependent, it can be your uncle, your mother, your grandmother, your mother-in-law, your brother-in-law, it's 10,000 per each person. And then you have the critical illness, which you get 10,000. So you get half the death benefit. And then you get 10,000 for permanent disability. Okay.
Okay.
Yes, please.
Thank you very much for that. That's well explained. I think what Mr. Amma asked you earlier on.
Yes, I'm coming to that.
Yeah.
So, for those of you out of the country, since this is a group life policy, normally we pay the benefits to the group account, and the group will disperse that money to your next of kin. I have groups who have picked up next of kins of all their members. I mean, that's something I'm encouraging other groups who haven't done it to do it. So that when something happens to a member, you know exactly who the member wants the money to be given to. Okay, just as I spoke about, when you have that stated as a year group, you can decide everybody should bring who they want the money to be given to, who they want the 20,000 to be given to when something happens. So we give it to the group, and then they give it to the members' family. Okay. So say, is that okay?
Yeah. So thank you very much. But I think what I was trying to impress upon you is that what Mr. Amma was asking is not about the platinum, because the platinum, we know there's no problem there because we've got members in America, UK, whose benefits have been paid because we pay that without any issue because it comes to us. But what about if we take an individual policy from the ones that you talked about before, the ones that we are entitled to if we are outside? What happens to the payment?
Okay.
That's the question I asked you before, and then that's what he's asking as well. So, for example, if we take a health policy or a home insurance or a travel policy, anyone that we are entitled to take, what happens? That's what he wants to know.
Let me take a funeral policy. When you take a funeral insurance policy, you have a part that states that you should put in your next of kin or your trustee. So if anything should happen to you, your trustee would be contacted, or your trustee can contact the insurance company and the money will be given to them. When you take a house insurance policy, that one covers a different benefit. It covers fire and allied perils. So we don't think you should be dead. So you will tell us that the house is burned down, so we pay you the money. So depend on the policy, we would know exactly who should get the benefit when something happens.
So it doesn't create a problem whether you're outside or you're living.
Not at all.
Okay. All right. Thank you very much. That's all for me. I encourage the rest of my colleagues to also ask their questions.
Yes,
because I did ask this because people had come to me to ask all of these questions. So I was posing on behalf of my group. So now I'm leaving it. I'm off now. So everybody should ask their questions. Thank you very much.
Thank you.
Yeah.
We don't only have the Bleeobi, we also have some staff from the Association of African Universities. Maybe they also have some questions, so we can open up the discussion.
Yeah.
Thank you.
Hello, Kwabi. I have a question
Yes,
for.
Yes, please.
Yeah,
Yes, sir.
I'm looking at your table on the benefits, options and benefits. What I would want to know is, if I am contributing, why is the benefit heavy on death instead of let's say, critical illness or permanent disability of a member who is contributing to the scheme.
Okay.
Why
Okay.
would you want the person to die and you pay 20K instead of trying to keep the person alive if it has a critical illness or something? And then, I mean, I hope you understand where I'm going
Oh,
to
I
with that.
perfectly understand. You should see the smile on my face because
Exactly.
it's such a question we normally get. I must
Okay.
say that this alumni policy was designed, it was pre-designed. Okay, that is why you see the benefits like that. And so it comes with its own terms and conditions. For example, if you're on the alumni policy, your entry age for an adult defendant cannot be more than 80. I'm sure we went through that. So this is specially designed policy. If you want your benefits to be the same, for example, you want 20,000 for death, 20,000 for critical illness, what will happen is we will take you off this alumni benefits and then we will price you differently. Okay. So you look at this like you've like a pre-designed policy, like you go to the shop and you're going to buy what should I? Okay, so for those of you outside, your package for telephone comes with, even for us here, comes with, if you pay for 10 Cs, you get 10 megabytes data, you get 10 SMS calls, you get 10 minutes to other calls. It has been fixed for you. This is how this looks like. It's been fixed. So when you are on the alumni policy, this is what you get. If your year group says that we don't want this alumni thing, we want to have the same benefits across 20,000 for member, 20,000 for outdoor, for critical illness, 20,000 for permanent disability, then your year group would be priced and you will not pay for 80. You will end up paying what is equivalent to what you'd want. Please, I hope that is okay.
It's not, but since you say it's predetermined, I'll
It
just
is.
keep it
So
like that.
yes, so let me summarize
Because
it
I
for you.
still think that even if it's an alumni, like you said, it's age determined, okay? And given the ages, I mean, like I'm sure earlier people said the average age is about 55 or whatever it is, nearing retirement and all that. Sometimes, I mean, there are people who are on this platform, myself, I don't have any aged dependents. Okay, I'm on the scheme. All right. I'm not saying that I don't have any aged dependents, so I wouldn't be on the scheme. I am there. So what are the benefits? I mean, I don't have to, I mean, if I die, whatever is paid is my back case, as who put it. So if there should be any benefits accruing from whatever contributions I'm making, it should be when I am alive and not when I am dead.
Okay, so let me summarize again. I said that what you've asked for, it is very doable. Actually, we have some year groups who've done it. Okay, so if your year group wants to have equal benefits for death and critical illness, that can be done. All we'll have to do is reprice and give you a different premium to pay. It's
What
highly
what range are we looking at?
I cannot say that now because that will have to go on to underwriters. So if we are interested, I would do that and send it over to Mr. Bakol to share with you on your platform.
Or maybe a good idea to have both
Yes.
options, then
Yeah. So
people
that is
can
not,
look at it.
yeah. So
Because I
Mr.
know somebody has also mentioned about if I mean, he doesn't have any aged people to look at, then what happens? So maybe it'll be good to share that on as well. And then
Mr. J, we have some year groups who are, for example, those who finish school 77, they are like hitting 62, 63. Okay, they don't have parents. Their parents are all done. I mean, majority of them. they come to you and they tell you, we are not interested in adult dependent. It's possible, we do it for them. So insurance is very dynamic. It's not stagnant. So don't worry about this chat. If you are interested in changing the dynamics of this chat, we are ever ready to accommodate that. Okay. So it's not a problem at all.
No worries.
If there is
Thank you.
a
Thank
question
you.
from there is a question from Efualamti,
Oh, okay.
who says that are there any other policies that also allow for money to be invested in some form of wealth master plan?
Yes, we have a lot of those policies around. We have one that's called a lifetime planner. That's when you take it over the period of time for, some of them say 10 years, 7 years, whatever period you want. And when you're ready, you can go for your money and then they pay you back. Most of the insurance companies do have that. So yes, there are policies like that. We have one, I think, which is also called the Wealth Master. So yes, we do that. We do have that. Okay.
Hi, this is William. Can you hear me?
Yes, sir.
Yeah, well, I'm based in London anyway. With the policy, the pension one.
Yes,
I'm
sir.
60 years old now. So let's say if I come to Ghana, actually it's been in my mind to, get one. But can you recommend me any of the good ones, please?
Yes, sir. Yes, sir. I'll do that. Okay. So if you could kindly put your number on the chat for me, Theo, if you could kindly pick it up. Say I'll send you a message tomorrow and then we'll have a discussion.
Okay, thank you, Efua.
Don't mention, sir.
Okay, Justice Ewua also asks, if someone was to undergo heart surgery, will it be considered as a critical illness?
That's a good question. Well, I would have to check that, Mr. Beku. I will check that and then give you the answer to give to him. Okay. When it comes to the critical illness, the whole list of do's and don'ts. So I want to be careful before I commit myself. So I'll check that and then I would let you know. Okay.
Okay. Then another question from Jibril Baba, who says, how are the home insurance premiums calculated and how is that available?
Okay, sir. Okay, so for that, we calculate it based on the value of your house. You'd get a valuer to value your house, or sometimes people just know how much their house should cost. I always advise for you not to add the land, because the land is not part of the rebuilding cost of your house. So you give us the rebuilding cost of your house, what it will cost you if you have to put up the structure up again. And then we have a rate that we apply to it, and then you pay for that premium. I must say again, I think I said it during my presentation, let me say it again. Home insurance is one of the cheapest policies you could ever have. So if you have a house, you've built it, with your hard-earned cash, I would advise you to secure that house. Okay. It's one of the cheapest policies that you can have. I'm sure Tony can ascertain to that. Or Tony. I haven't heard his voice, so I want to hear his voice. It's one of the cheapest. Okay. So kindly.
How come it's cheap and it's not popular?
That's a good question. Oh, you see, now I can't even answer that question. But I mean, education, we are trying to give a lot of education now about these things for people to understand that there's no need to have a house. And I mean, we have so many insurance, and some of the education we are doing is like today. I don't even know how to explain it. I mean, but it's there. I mean, home insurance is one of the cheapest policies you could have.
Yeah, so I hear, but
It's true.
funnily enough, it's not. I mean, maybe for vehicle insurance, it's because the police would stop you on the way. Otherwise,
Because it's
I'm sure
mandatory.
most people wouldn't do it.
Yes.
But
Yeah.
for housing, yeah, it's taken for granted because I believe you guys need to do a lot more on the education bit of
I
stuff
I
because
I
insurance, well, has been it's been a silent thing. I mean, people are not going into it because of past experiences, and it's all because of vehicle. People have had bad experiences with vehicle insurance and stuff like that. So I'm sure most people have set their mind that look, these insurers, they are scammers. Excuse me to use that word, but
so you are
I
permitted.
believe that with a lot of education and changing you guys your modus operandi, you should be able to get a lot of people on board such programs.
Yes, I totally agree with that. Okay,
Yeah.
so I've taken Mr. Gilbert, I've taken your number. I'll call you tomorrow and then we can talk about it.
I
Okay, so
would be interested in the insurance, is it tier 3
tier 3. Yes.
insurance thing as well? Yeah. The
Okay, so
what's the mode is which insurance companies would, because I'm not on SNITs, so I want to do something personal. So
I'll do that. I'll call you tomorrow. Okay, and please, you are
no,
you are the one who just dropped your telephone number, right?
no, I haven't dropped my number. Is your number the 026 ending 8847?
Yes, please. That's
Okay,
my number.
no worries.
Okay, then. Okay.
I'll send you a WhatsApp.
Yes, please. Okay.
The name is
Any more?
Osman.
Thank you, Mr. Osman. I'll be
Yeah.
expecting.
Hello, Efra. Can you hear me, William? London.
Yes, please. Yes, please.
Yeah, based on what my brother just said, but with good adverts, I think, it can reach a lot of people. And it's especially in Ghana, it's the tree and then, the other dialects that, they are really used to it. So if all these adverts can also be channeled through that, I think a lot of people will hear of it. And then, the confidence and the others will follow.
Yes, sir.
That's my
Yes.
contribution here. Thank you.
Thank you, sir.
If my hand is up,
Please,
can I make a comment? Ask
Yes.
my question. So this is Tony Hassan once again. So
Hey, Tony, I'm so happy to hear your voice.
I'm happy to hear you too. So a quick one. There's this point about advert, which I think is laudable. The only thing is that the advert actually, as it were, makes the product popular, but it may not remove some myths that exist that is counter, um, that does not make it interesting for people to enter, especially into life products. If you look at the alumni thing, at least even if the insurance company is not active, our folks, David and Co, are there to do the prompting. But there's this myth that insurance companies, especially on life products, and typically because men in particular fear that when people or especially their wives get to know that they have these policies with large sums assured, they are likely to mysteriously die sooner. And so they don't tell anybody. And the insurance companies also somehow inadvertently do not inform the next of kin. So it ends up that the insurance companies get to keep all those monies invested or insured. So I think it's an area you want to look at. What I think it's a real thing. I have spoken to many people, and it's a real and present situation. I don't know how you're going to help deal with it, but instead of advert, I think more about these types of engagement would be more helpful. My
Okay.
second one is a question. I was told when I was learning insurance much earlier that especially general vehicle insurance, when you make a claim, you are going to be put where you were before the event that caused the accident or whatever. So, for example, if I have insured my brand new car and my car is 3 years old and it catches fire, so I lose it, I'll be giving enough claim to cover a 3-year-old car, not a brand new car. I don't know if this is still the situation because, and I'm asking this because you mentioned that there are some products that you have to do a certain top up and all that, and it will give you the kind of car you want or the nature of the car you want. So I just want a bit more clarification here. Is it that maxim has changed, or there's just a new product that is ensuring that when you do your top ups, you get your new car in the event of a loss? Thank you.
Okay, so thank you very much, Tony. Tony, I don't know whether you're trying to test me or something, but
Oh no.
I hope I'll be able to answer your question. The first one, yes, in some jurisdictions, what happens is that the insurance companies do alert the next of kin that someone has taken a policy and they are the next of kin. Okay, but here we don't. So what I always advise my clients is that there are wills. Kindly put it in your will that you have a policy, and your beneficiary would always get in touch with the insurance company. There's no point in hiding things under the table or under the bed. So make it clear that you do have these policies, so
Yeah,
that
that's correct.
so that we can, when something happens to you, there's someone there, your best friend. Tell your best friend you've taken a policy. Okay, I don't think your best friend can kill you and benefit. If you don't trust your wife or you don't trust your husband, get someone else to know. Make a will, put it somewhere, so that when the event happens, there's someone there who can pick it up and follow up and get the payments through. So it's important that we do that. Okay. For the next one, let me take the car example that you gave. It's a very, very important thing because we have a lot of issues when there's claims. Now, what I was trying to say, with Ghana, our inflation, it's kind of like terrible. You wake up one day, the dollar is 16, the next day, the dollar is 10. So if this year you bought your car for $20,000, you don't let me use dollars, let me use Ghana cedis. You bought your car for 300 Ghana cedis. And at that point, the dollar was 10. It means that you bought your car for $30,000. Okay, clearing everything, you did your insurance, everything. The next year, the dollar becomes $15 per one. Naturally, what has happened to your car? It's depreciated. Although cars do depreciate naturally, it's only in this country that we've seen cars appreciate. So it means that if the same car, you should have an accident with the same car, and you have insured it for 20,000, the insurance company will come and pay you 20,000. What has happened to your car? You won't be able to buy the same car again, will you? So we are advising people to really look at the values of their cars again and ensure that at any point in time, the principle of indemnity takes place. And the indemnity says that we should be able to place you in the financial position we found you prior to your loss. And that is something that happens with your help. So if you do not ensure that that is done, to be able to always make sure that your policy documents are amended accordingly. When something happens, you'll be in trouble, especially those who are, the CD equivalent values. It really needs to be re-looked at constantly. If we had an economy whereby the dollar wasn't that fragile, this shouldn't have been an issue. Then when you do have claims, of course, we have the no claim discounts that we put on your claims. And the no claim discount says that at a period in time, you didn't claim. And because you've been such a good and excellent client, we are giving you a discount. So if you do claim, we will bring you back. We'll take off your discount and bring you back to pay the original price. So for example, if your no claim discount was 50%, we might bring you back to maybe 45, 35, 25, wherever the insurance company thinks is right at that point in time. Okay. So Tony, is that okay?
I think it's very good. Thank you very much.
Thank you.
Yeah, fine.
So check your car insurance, okay, Tony, and call me about it.
So following from what you said, I'm. Does that mean that if, let's say, at the time of insurance, the value of the vehicle, let's say 10K US at 10, so that's 100K, you insure at that value? using
Yes,
the 100K.
yes,
Okay. So a year on, the value of the dollar against the CD depreciates. So it's now 160. Are you suggesting that if I'm renewing my insurance on the second year, based on the value, maybe the dollar to CD ratio, I may have to up the value of the vehicle to, let's say, 160K, and then pay the premium, the insurance on that 160? Then it means that if something happens within that year, then I can make claims with that.
yes. In insurance, because it's under insurance, it means that you
Mhm.
have it under insured your assets. Let me give you an example of a house. So your house, you built it for 100,000 Ghana cedis. Okay.
Yeah.
No, let me do 200,000. So that my calculation will be easy for me in my head. And then, but when you were going to insure the house, you did 100,000. It means that you have insured the house 50, half the price of the original price, isn't it? Okay.
Yeah.
Then you have a claim. Half of the house bends down. You bring a bill. The bill you are bringing is not on 100,000, it's on 200,000. Is that agreed on? Do you agree on
No.
that? Okay, why? Okay, let me take it again. You put up a house for 200,000. The blocks,
Yeah.
the cement, everything, when you do the calculation, it's 200,000.
Yeah.
But when you were
But you
doing the
insure on 100.
100,000, it means you've
Yeah.
insured the
So
house for half the
you have
value.
undervalued. You have
Thank
undervalued. Yeah.
you.
So you
So
make
when
your
the,
claim on the 100,000.
but most of the time when you are bringing the estimate is not made on 100,000. It's made on the present value of the cement and the sand. So what the insurance company will do is they will look at the house, they will look at how much it will cost you to build the house, and then they'll do proportions. If 200 equals to 100, then what will 100 be? To be 50,000. So you get 50,000.
Yeah. That is a fair deal. So not with the
So that is
vehicle.
why
That's what I'm
under
saying. So it means
insurance.
that
So let's flip it to the
every
vehicle.
year you might have to increase your premium if you want to get the true value of your vehicle.
You see, it's so unfortunate that our CD is the way it is.
I
Okay.
mean, that one we
Yeah.
can't change it.
Change
So
it.
we
But
have to live with it.
yes, if you want to have a fair price of your car, okay, I won't say every year, maybe every 2 years, you can look at the value of the car and think through it and be sure that you are valuing the car at
Close
the
close to
value.
normal, close to the
Thank you
value
very
you
much.
want.
You
All
want
right.
it. For example, if you are using a
Yeah.
V8, you bought it straight from Toyota, okay, you know that it will not depreciate that fast, So if you are insuring it in CDs and the CD keeps rising, you need to protect that asset you are driving in. So you
Yeah.
have to really look at it and then see whether you should do something about it. Yes.
Okay. I agree. Thank you.
Thank you too. So,
Yeah, hello.
hello, sir.
Yeah, it's Mr. Ama here again.
Yes, Mr. Amma.
Um, this thing has been bothering me for a very long time before I came in the first time. Let's say I take an insurance on my life, okay? Let's say for a figure 200,000 Ghana cedis, okay? And I happen to pass away, but I didn't do a will. But in my heart of hearts, I know that money should go to my first child. But then because I didn't do a will, will that money be paid to my wife or my first child?
Okay. So, Ms. Amma, I think I stated it that insurance policies work like snakes. We do not care what you've written in your will. What we care about is what you have stated on your insurance policy at the point at which you were picking the insurance policy. So if on the insurance policy you said we should give the money to your sister, that money is going to go to your sister. We don't care what you've written in your will. It will go to your sister.
Okay.
That is why I said we should constantly review our terms and conditions and what we have written on our policies. Okay. It is very important.
Okay. All right.
Thank
Okay, I think there are some questions in the chat, but let me pick from the last one, the bottom up. It says, some of us are above 50 years. How long can you be insured to start claiming the retirement benefits?
Okay. There are different policies. So what I will do is, whoever is interested, please, again, I will let one of my colleagues call you, or even Karen handle that with you personally. Okay, because it's a individual basis issue, so that we can do that. Okay.
Hello, this is Samuel online.
Yes,
Madam,
please. Yes, sir.
good evening.
Good evening, sir.
Yes, I wanted to find out from you, why is it that insurance companies are not interested in agricultural businesses?
Please, may I know who's speaking, please?
This is Samuel Enyan.
Miss Nyan. Okay.
Yes.
So agric insurance comes with a lot of sophistication. Okay.
Mhm.
For example, when you go to Kenya, Kenya even has a wildlife insurance policy, whereby when the wildlife, they do a lot of these wildlives. For example, an elephant should come onto your farm and should stamp your crops and kill it. They actually have an insurance policy for it. It's sophisticated because we need to know the weather index. We need to know when it is drought, and we haven't gotten there yet, but we have a session that is called GAIP, Ghana Insurance Agric Pool, that handles agriculture. So if you're interested, they are there. I think Glyco also has started agric in a way, Glyco Insurance. So we could look at these things for you. But I think we are getting there, and it's become a gradual process, but we are getting there. So if you want agric insurance, you can try GAIP. We can help you with GAIP, or we can talk to Glyco to understand whether they could help with your cover. Okay.
So, in a nutshell, you are trying to say that the risk factor in agric is higher,
It is high.
especially when it is about uh, natural disaster.
It is
Is that
high.
not it?
Yes, the
Yes,
risk
but
factor in agric is high.
yes, but I heard you mentioning that when you have a home insurance,
It's the cheapest.
a fire or flooding and all that. Flooding is also natural disaster. Why do you focus on that, but not
Okay.
agric?
Because the risks are different. You're talking about the house and you're talking about flooding of a house. The probability of a house flooding and it collapsing is far less than the probability of a crop of corn getting flooded and the corn getting destroyed. So anytime we talk about insurance, we just don't talk about the event happening. We talk about the risk and the impact where the event happens. So if I have a house, what is the probability that when it's flooded, the whole place will collapse? The content might destroy, but will the house collapse? What is the probability that when there is a flood on a field, I will lose all the crops on the field? So we use that when we do the calculations. So it's not just about, oh, it's flood, so it's flood everywhere. It's the impact of the flood. And when it happens, what the impact is. But we have GAIP, we have Glyco. We can always pick up the conversation with the two of them if you are interested.
Well, I'm not really satisfied with it, but I'll take it like that.
You can kindly put your number there, and then
Yeah, I'll put it there. I'll
Yes.
put it there. Yeah, thank you.
Thank you too, sir. Okay.
Okay, I think we have spent an hour and a half on this conversation. I don't
Wow.
know if there are any further questions from my colleagues, maybe we give just 1 minute to see if there will be any hand up, or else we wrap up and then call it a day.
Hello, Ransford and Ifwa.
Hi.
I just noticed that the webinar was recorded. Can you confirm that?
Yes, it was.
Okay, so if you can make it available to us in the near future so we can share with colleagues who couldn't make it today, that will help a lot, and then we'll get back to you with any other issues around it. Thank you.
Yeah, Square.
Yes.
Everyone,
Yes, sir.
to add to what David just said, maybe you can add your slides as well if it's allowed. I mean, if you're allowed to share as well with the recording.
Yes,
That
sir.
would be very much appreciated.
Okay, sir, no problem.
Okay. Thank you.
Thank you, too, sir. Okay.
I don't see any more hands up, apart from Tony Hassan, whose hand has been up perpetually. I guess maybe he's forgotten his hand is up. But 1 hour, 30 minutes, I think we have exhausted virtually all the questions that we have piled for IFWA. So colleagues, let us give a round of applause. I have a lecturer in Nigeria who says that a good conversation never ends. And I know this is just the beginning of more engagements on insurance and old age. So, Madam Ifwa, thank you very much for your time. We have learned a lot and we appreciate you so much and hope that we can get a one-on-one engagement with you to clarify some of the many issues that you defer to other colleagues. So on this note, and on behalf of my colleagues, the Bleeobi 87-year group and Accra Academy, the Accra Academy 87-year group and the Association of African University Staff, we say thank you very much. Stay blessed and God bless all of you.
Okay.
Thank
Mr. Beko, if I could also say
Yes,
thank
ma'am.
you very much. Thank you for the opportunity. It's always a joy to be able to have this opportunity to talk about the field I've been in for so many years. So I'm very, very grateful for the opportunity. Any question, my colleague Karen is on your platform. She's available to answer all the questions, and I'm also always available to answer any question. And if you need any insurances, you can always call on Assure Advisors. So thank you very much. Thank you.
Thank you, Efwa, from London. Thank you.
Thank you.
If I may, I've already started, so I'll continue from where we have stopped for now.
Yes,
So.
please, on the phone. Yes, please. Thank you.
Thank you
You
so
hear
much,
more from me once
Efwa
you get
and team.
answers. Yeah.
And thank you, Tony, for the comments too. I'm grateful.
Thanks, Efwa.
Efwa, that was excellent. Thank you so much. And Theo and the rest of the team, well done. Thank you.
Thank you, sir. Thank you. We are so grateful. Please have a good week, everyone.
Same to you.
The same to you.
Thank you.
Thank you. Bye.
Bye.
Okay.
Charlie, do you remember those group eating days at school? Someone always had something valuable to offer. Gari here, sugar there, the almighty Shamima. But there was only one rule: no contribution, no chop. This is why Enterprise Life has introduced the Alumni by Enterprise Life product.